Home Depot and Lowe's reporting results in the last 2 days. Which one of those two stocks should be in your portfolio? Our next guest says that Home Depot is the clear winner. Joining us right now to talk about that pick and more is Jason Ware. He is partner and CIO at Albion Financial Group. And Jason, saying that right now doesn't make you look like you're brilliant, except for you came up with this before we heard results from Lowe's. Lowe's out with results this morning. That stock, last time I looked at it, was down by almost 10%. You made this call ahead of that. What did you see between these two that made you think Home Depot is the one that you really want to be sticking with?
Yeah, this has been going on for some time if you look at the difference between Home Depot and Lowe's. And really, if you, across all operating statistics that we look at, whether it's return on invested capital, operating margins, sales per square foot, you name it, Home Depot is a better operator. They're more efficient, and they've got a handle on both their supply chain and inventory management in a way that Lowe's has been envious of for some time. One of the other things that Home Depot really has going for it above Lowe's is they have a pretty superior geographical footprint with their stores. They expanded earlier in this market. They were later to the market. They were about 30 years later as a company. They were founded in the mid-1970s versus Lowe's in the mid-1940s, but they expanded more aggressively and early on. So they also have a premier store footprint, more urban, less rural. So Home Depot continues to operate in a way that is impressive relative to Lowe's, although both are benefiting over the long term on what are some secular trends in housing.
Lowe's said this morning that it's going to be coming in with lower than anticipated earnings for the full year, in part because they're going to be making a lot of investments that are probably overdue at the company. Lowe's also this morning is down by almost 10%. Does that change your mind about any of this?
It doesn't necessarily change our mind. I mean, as we're looking at what Lowe's is trying to do, they've been playing catch up with Home Depot for about a decade. And again, looking at the statistics that I mentioned, and most important is that net margin, where they're about a third of Home Depot. Home Depot hits about 10%. Lowe's is around 3%. So they're really trying to make the appropriate investments. Home Depot modernized, quote unquote, modernized their business about 10, 11 years ago. And ever since then, Lowe's has been looking at their model and trying to capture what they've been doing really well. For example, Home Depot's done a great job in the pro business, which is higher margin and has higher customer loyalty. So when you go into a Home Depot, a lot of pros feel like they really serve their needs well. Lowe's doesn't really have that going for them so much. So they're looking to the Home Depot model, and they're trying to make the appropriate investments to catch up to what they're doing.
Did Frank Blake do that?
Frank Blake was absolutely integral to that growth and to those strategic investments they've made.
Pretty amazing.
Yeah, absolutely.
So with one person pointed out that the same store sales at Lowe's, they closed the gap on Home Depot. The analyst we had on earlier.
4.2%.
Right. Yeah, 4.2 versus 2.3 or 2.5, whatever it was. Are they making some gains against Home Depot, or that's just a one-off, you think?
I think it's probably more of a one-off. Again, I think if you look at loyalty, Home Depot bests Lowe's in just about every category. So I think they had more room to make up. So there's going to be some ebb and flow there. But if you smooth out and normalize those same-store sale trends, I think Home Depot still looks superior relative.
Another stock you like is Google, even though its last earnings weren't as impressive as you might have anticipated. What is it that you like about Google overall? Alphabet.
Yeah, I mean, sure. Google still has a great secular core story in their digital advertising. A lot of market share gains there still to have. There are a number of pricing power opportunities they have, for example, in like YouTube, monetizing YouTube. They're making long-term strategic investments in areas that right now don't have high profitability metrics as measured by traditional scores. But whether you look at healthcare, whether you look at transportation, whether you look at AI, some of these areas that they really think are going to be the next wave of growth 5 and 10 years down the road, they're making strategic investments today for that. So we continue to like Google. It's growing almost 20% sales growth while it's trading at about a 20 PE. So that's a nice valuation for a secular growth story.